So good morning. Today on this episode, what I intend to talk to you about is basically to walk you through some of the tools you could use to get you started with stock investing. Now, let's state very clearly here that I'm not an expert in this arena, but the little knowledge I have, I'm going to share it with you in this episode, and hopefully it will either spark your interest or also push you to look into it. Now, it is for educational purposes only and it's not in any way a financial advice. So, what I intend to do is to make it a little bit of semi practical. So, I have a kind of like cheat sheet here, which we'll walk through. And for each tool that I introduce, I'll tell you the purpose I'm using it for and how to use the tool. So, having said that, let's start. I'll start with some concepts. So, we will have in total 4 concepts that we'll discuss here, but let's start with the first concept here, which is value investing. So, um, the simplest explanation that I found this matter is this one here. So I will make it a little bit bigger, and it's actually introduced or explained by our one and only ChatGPT. So the explanation he gave is that value investing is basically when investors look for stocks or other assets that appear to be priced lower than their actual worth, aka you look for a price. The idea in this kind of strategy is to always look for assets or stocks that are practically lower than their actual worth. So there are two key aspects here: lower and their actual worth. So that's basically the idea of value investing. So having said that, let's shift gear a little bit here and move to the first tool, which is basically called Finviz. So Finviz is basically it's kind of like stock screener. So the way I use this screen for is, let's say I start like the idea is that I want to look for a stock that's a little bit cheaper than the actual worth. So, aka, if you remember what I discussed earlier of the idea of value investing, so I look for, or I come in with the idea that I'm looking for a stock that is a little bit cheaper than the actual worth. Now, remember, the actual worth does not necessarily mean that is the market price. Let's say the actual worth is what I'm after, and not the actual price. So what I do is I come back here in the screen, and you have kind of like a lot of tabs here, but I will focus on 4 main things. So the first is the market cap. So I'll be looking at, say, I want a so not so big company, but at the same time not a small company. So I would go in the middle. So let's say in the mid range of the market cap of 2 billion to 10 billion. So I'll select that. And because I'm looking for a stock that's kind of like cheap and it's not so expensive, I will also focus on the price. So let's say I'm going a little bit under 10 euros, $10. Yeah? Let's say $10 is my target. And I want, of course, my stock to give dividends. So let's say the dividend I'm looking for in this aspect is dividend yield of, let's make it a little bit more, let's say over 1%. Okay, so I have this here, and as you can see, there are a lot of things here that change, but maybe the last part to make it the 4 aspect that I'm going to change is I'll target the United States. So let's say I'm looking for a company in the United States. Price range, the market price is under 10. Definitely dividend giving company, and the market cap is between 2 billion to 10 billion. So already you could see that I have some list here, but I could also kind of like narrow it down. If, for example, I'm looking for IT, I could narrow it down. But in this instance, I'm not looking for any specific industry. So let's just leave that to any. The other aspect is that you could look at is the fundamental. So basically, the first filter we did. So again, this is basically the filter. The first filter we work towards is the descriptive. And from descriptive tab, you could see the different key KPIs under that function. So for example, we have the overview. I usually go with the overview because I don't want to break myself down too much with all this, because I have other tools that I think are basically better than Finviz in terms of valuation, financial performance. So I use this basically to screen out my stock, and once I narrow down the stock I want to go into, I move to the next tool that I will introduce. So in this instance, let's say we are looking at, I don't want a rates, but let's go with energy. Let's say I want to go with ETRN. I click on it to see, just give me a little bit of idea how the stock is done. I could see that we made a sales of about 8 billion. Dividend is basically 60 cents, that possibly be every quarter. Dig a little bit deeper into that. The next instance that I could quickly have a look is to look at some of the ratios here. So for example, I could look at the quick ratio, which is looking good. So quick ratio is basically, you could look at it as how they are handling their debts. So at the quick ratio within a year, how they are handling their debts within a year looks very good. And we could also look at the debt to equity. So i.e. the amount of debt in relation to the equity of the company. It's not too bad. Yeah, so it looks like a very decent company, and the current price is, let's say the current price is exactly $9.71. Okay, so I've narrowed down my stock, which is called Equitrans Midstream Corporation. The next thing I'm going to do is I will copy this sticker here, and I'll go to the next step in our chart. So in our sheets, let's go back to our cheat sheets that we were showing before. So here, so we've talked about that. The purpose basically is to narrow down, to screen out the stocks I'm looking for based on my criteria. And so in the aspect of how to use it, I've showed you, you could narrow down the KPIs you are looking for and then select. So then the next tool that will come into focus is Simply Wallstreet. Now, before we go into Simply Wallstreet, I would like to discuss some terms actually. So there are some terms that I think is necessary for us to discuss before we go further. So terms like fair value, market value, margin of safety, undervalued or overvalued stock. So to do that, let's shift gear a little bit and look at margin of safety. No, I think it's better to look at undervalued, overvalued stock. So in stock market, there are two things that, or there are certain terms that you should put into. So the market price is basically the price at which that stock is trading, and the intrinsic value, also known as the fair value, is the value that you think the stock could be. This value is basically obtained by calculation. So there are certain models that we talk about those models. We talk about those tools that you could use to model this intrinsic value or the fair value. And so the other term is the undervalued stock. So if the market price, aka the current price of that stock, is less than the fair value, in this case the intrinsic value of that stock, then you will say that stock is undervalued. But in the opposite side of the equation, if the market price is greater than the intrinsic value, then you see that stock is overvalued. So if we've established that fact, the next thing we could look at is margin of safety. Now, remember we're talking about stock. So let's go back to this chart again. So remember we're talking about market price, which is the current price of that stock, and also the fair value, aka intrinsic value of that stock. Now, because as a value investor, you are employing the strategy of value investing. The idea is that you always want to buy stock that are way below their market price. So, in fact, your target is always to buy it a little bit below the intrinsic value. Now, when you buy your stock at the price that is a little bit below that fair value, you have a kind of like cushion. Now, that cushion between the price at which you targeted and the strict intrinsic value is what we call the margin of safety. So let's go back to the definition. Now, margin of safety, to explain that concept very well, is the buffer cushion that investors build in to protect themselves from potential errors in their analysis. So imagine you are buying a house. Now, the market price might fluctuate, but you feel more secure if you buy it as a price significantly lower than its appraised value. So, aka than your fair value that you calculated. So that's basically the margin of safety. So let's go back to the sheet we were talking about. So we've introduced fair value. I told you there are some models you could use to calculate this. One of such models is DCF, discounted cash flow. I'll show you a tool that we could use to do that. Also, I've talked about the market value, aka the current price of the stock, the margin of safety, the cushion between the fair value calculation you have and the target value or the target price which you bought the stock. That cushion, which is like a cushion of uncertainty, if things go south, that we could count on is the margin of safety. Now I introduce also undervalued and overvalued stock. I said if your current price of the stock is less than the fair value that you calculated, then that stock is overvalued. And in opposite, you have overvalued stocks. So having said that, let's look at the next tool, which is basically called simply Wallstreet. Now, I'll tell you about what I use that tool for, the purpose, and how I use it. So let's go back. So this is simply Wallstreet. Let's go back to the. This is how the tool look like. So let's say give me a minute here. Let's quickly sign in there. So you've signed in there. So this is how simply Wallstreet looks like. Now, what I use this particular tool for is to look at the fair value and to decide whether my target stock is undervalued. how do I go about that? So my idea, give me a second here, let me test this. My idea is basically, okay, remember we have this ticker, the ticker that we have here, we copy it and we bring it to simply Wallstreet. So paste it here, then I hit enter for us to see. Okay, give me a sec. So this is it. So I was kind of wondering why it was not working. So this is the stock. So if you remember, there's also the one here, it could transmit stream. So this is exactly what we're looking for. And the reason why I like simply Wallstreet is basically because of one, the user interface is very simple, and you can easily have the first view of what you are looking at. So in this instance, I could see the dividend, I could see the value, and I could see the future growth of the company, and I could, in a very past instance, see the general health status of the company. But if I want to go deeper to see the valuation, aka if the stock is undervalued or overvalued, which is basically what I use this particular tool for, I'll click on value here. And no, excuse me, this is basically the valuation, which again is what, as I was talking about, it gives me the general overview and help me decide if basically this stock is overvalued or undervalued. Now, I scroll way down. So again, let's start from the beginning. It shows me the dividend. Tells me that the dividend is current at 6.2% yield. It breaks down revenues and expense breakdown here. I could see operating expense for a year to be around 1.2 billion. And if I compare that expense in general to the amount of revenue they are making, and then I can generate also the gross profit here. So yeah, the company is not too bad. And here also I could have a first glance of their market cap, the revenue, expense, the PS ratio, the PE ratio. So yeah, this is basically what I use this stock for. And again, the target is basically to determine if the stock is overvalued or undervalued. So it's already has seen is the ETRN overvalued. So I'll go down, because again, this is what I want to know before even going further, or before deciding whether I should jettison this stock or I should go further in my analysis. So if I come down here, I'm beginning to see that a little bit of idea about this stock. So here I have the current price to be about 9.71, and the fair value based on the calculation of simply Wallstreet is 10.65. Again, remember, the fair value is based on our calculation about what we think the stock should be. So if the current price, which is the market price, is less than the fair value, then that stock is undervalued. So you could see that it's undervalued around 8.8%. Now, again, if you remember, I was telling you there are different kind of models you could use to determine the fair value, and simply Wallstreet also use the discounted cash flow model to determine that. But I won't be going into details about this model here in this particular tool, because I have another tool which helps me to have a look at that particular model. So, okay, I have a rough idea about the stock, and it's looking positive so far, meaning it's an undervalued stock, and based on my strategy as a valued investor, it tallies with what I'm looking for. So the next step will be to go to Guru Focus. Now, Guru Focus is a little bit similar to simply Wallstreet, but the main idea I use this tool for. So let's go to Google Focus. This is Google Focus. Already you can see that Google Focus also have a lot of analysis. Now, see the differences. There are some differences between Google Focus and simply Wallstreet. Basically, simply Wallstreet a little bit simpler to look at. But Google Focus dig a little bit deep into a lot of analysis. Now, the reason why I use Google Focus is basically for two reasons. The first is that I like to see the DCF to go deeper into it. So the model I was talking to you about, and I also like to see how the competitors of this particular stock are doing. So in this instance, let's put the ticker here and see what Google Focus brings up. Now, again, this is a free trial version. If you want a complete details about or complete access to Google Focus, of course, you have to do the subscription, which basically is here. Now, so coming back, let's have a look. That's what I'm looking for. So again, I have the financial strength, profitability, and growth here. Now, back to what I was telling you, why I use this. This is the reason why I basically use this tool. So you could see they have a different estimation. Now remember, we were looking at simply Wallstreet. Simply Wallstreet's calculation was that this particular stock was undervalued. But using value focus, you could see that the DFC analysis showed this particular stock to be overvalued, and the fair value puts at 8.42. So I will go in this instance, I will go with the analysis to regard this particular stock as overvalued. So I won't be going further in the analysis or in my choice of this particular stock as a choice. So i.e., I'll have to look for another stock that meets my criteria. But the second reason why I use this stock and this tool is to look at the different possible competitors here. So you can see here, I don't know why this is. Okay, so what I'm going to do is I'm going to sign in here because it kept on bringing just a minute. Okay, so I think we are good here. So, as I was saying, I said, so let's start from the beginning. And let's go back. So the idea is that I chose simply Wallstreet because it's simpler and it sounds like a first step in my analysis to determine if this stock is overvalued or undervalued because of the strategy I tend to go with when it comes to stock selection. The strategy again is value investing. Now I could see that my selected stock is assumed to be undervalued. But then the next step for me in my analysis is to look at another tool called the Google Focus. Now Google Focus, the reason why I chose Google Focus is because one of the detailed analysis it gives me particularly on the model DCF, I tend to believe more on this analysis than simply Wallstreet. And then it gives me also the choice to be able to see other competitors for this particular stock. And the reason for that is, if at the end I don't want to go along with this particular stock, I have other possibility of looking at the competitors and maybe decide on them. So having said that, let's have a look. Now, Group Focus is showing me that based on their DCF analysis, this stock is overvalued. And the fair value is targeted to be 8.40. Remember, the current stock price is 9.7, so it's way greater. So the market value in this instance is greater than the fair. Now, if you remember, we said the fair value is calculated basically using certain models. One of those models is this. Now, in this instance, I'm not going to go further with this particular stock because already I could see that there are kind of like disconnect between the two. One is showing me to be undervalued, the other is showing me to be overvalued. So I'm not going to go further. But looking at the second reason why I chose this, I have the possibility of looking at other stocks which are competitor to Equitrans mainstream. Now, if for example I'm looking at a target price of under $10 of the stock I want to buy, you could see that there is none here that fits that criteria, but it gives me the possibility of, say, let's say I decide, okay, this margin of safety, this looks good. This looks, Scorpio Tankers looks very good at a margin of safety of 71.91%. So if I click on Scorpio Tankers to have a look at if this particular stock is overvalued, let's see what comes out there. Yeah, it's already telling me I've reached my limit. So let's say Scorpio. Yeah, this is Scorpio Tanker. I want to see the DC value. Now you see, this is what I'm looking for. It's telling me it's really, really, really undervalued at a fair value 176.69. This is definitely a good bargain for my analysis. So in this instance, I'll be going further with this particular stock. So you could see I started with a screener. Then the next step was to look at the first instance to see if that my selected stock is within my range in terms of analysis, whether it's undervalued or overvalued. Then I went deeper to pick on the possibility of looking at competitors who could be a choice in the event that my earlier selection does not meet the criteria. So in this instance, I will go back to see if I have the same overvalued calculation using simply Wallstreet. If I have both tools to show the same results, then it's even better. So let's have a look. Already you could see it's a very good company. Let's go to valuation. You could see, it's very, very undervalued. So this is definitely a bargain. Let's have a look. Does it pay dividend? It does pay dividend, and the dividend yield is 2%. And the payouts 4% at 25 cents per share. So this is definitely a good one to look at. And yeah, then my next step would be, since I've already zeroed in on Scorpio tankers, and the current price of Scorpio tankers is, let's have a look. The current price is 49, roughly $50. So the next step for me is to go to TradingView to see if I'm deciding to go on with Scorpio tankers. The next tool for me, so let's go back to our cheat sheet. The next tool is TradingView, and the reason why I use this is for me to be able to decide my entry point. So, i.e., what price do I want to go into the market? So, what price do I want to buy this stock? Of course, the current market price is 49, but if I have the possibility of also buying it at 40, it gives me a very larger margin of safety. So that's the reason why I use TradingView. So let's go to TradingView to see the charts and see if I can. So the sticker is STNG, to see if I can zero in. Okay, I think I have to sign in here. So just a minute, I have to also sign in. So I am looking for STNG. So remember, we call these Scorpio tankers. Let's have a look at Scorpio tankers. See if we can get the we can have a look at the super charts. So again, remember, the reason why I'm using TradingView is basically for me to see if I can get a good entry point, even though the stock is trading at a very low price in comparison to the fair value. I still want to look for a good bargain. So in this instance, I'll be looking at the 1-day charts. Because I will be entering the trade at the day level, so I could zoom in at the lower time frame to see what's going on. We see that the stock has been over the days on a very uptrend level. Let's look at the charts. Yeah, you can see that. So in this instance, I can see that from my RSI, I could see that it is already reversed. So I expect a reversal in this instance. So I will be putting, hypothetically, somewhere here. I will expect the price to fall somewhere here in the first instance. So I could do this and put an horizontal line there. Or even if I want to, let's say I want to be more positive and I have more time on my calculation or my strategy to wait for the stock, the next possibility to enter the trade could be here. So let's say looking at somewhere here. That could be the next possibility. So I could decide I want to enter my trade at 44 and the stock falls down to $44 or 46. Remember, the current price is at 49, but I could wait because I have time. Let's assume I have time for the stock to come to 44 and then I go in. So basically, let's go back to the cheat sheet. So let's assume the gods favored me and the stock falls basically to $44, and I've decided, okay, this is what I intend to do. The next thing I have to do is to look for an online broker. I'm not going to go into this, but there are several options there. You could use Wallstreet, you could use IBKR, which is basically interactive broker, or you could use the Giro. And they are all the same. You look for that sticker, you put in the name, and then you set in your price. In this instance, we go back again. You are targeting 44, so you just you put in your entry price in one of these brokerage. So let's say you open your account at Robinhood. You're setting your entry price to 44 based on the calculations or based on your analysis from TradingView. And yeah, once you have that and the goals are in your favor, you could actually buy the stock that we just carried out. So basically, this is the step in my analysis that I use in from selection, from screening to the purchase of the stock. Again, this is just for educational purposes, and I'm in no way an expert in this field. But if you enjoy or if you've gained something from this video, you know what to do. Click, smash the like. Thank you. See you on the next one.